All right, Ken Orange Theory Trader back with you with another video, just showing a week in review for the patterns that I trade. I trade three patterns, and I'll go over them now. Just a reminder, though, or just a this is not the week that just passed. I actually made this document a little while ago, so I think this is the week prior to, but the patterns are still the same, so either way, and the dates will be on the chart. So the first one with sweeps, and what is a sweep? I'll show you the pattern first, and then I'll go through these trades. This is a sweep pattern. Let me make this bigger. I like to see a small daily range candle body. Okay, like this part right here, the body of the candle. I like to see it less than 30 pips. If it's that, sometimes you can go as high as 50, but the smaller the body is, the better. And what I look for the next day is for price to open, go above the daily high, and then close back inside of it. And we want to catch this momentum down to the other side of the daily range. And sometimes it'll break out of it a little bit before retracing some. So that's all a sweep is. It sweeps one side of the daily range the prior day and then goes down. That's it. All right, so that's all. All right, so dollar yen gave a good trade on Monday. This, I wish I could make this a little bigger, but I can't. But well, this was the Friday range. This was the Monday trade right here. Okay, so this right here is this right here, but it was 2 days, right? It was really a 3 day candle range theory pattern where you have candle one, the range candle, candle two, the manipulation, or I call it the money candle, and then payday was Tuesday. This fell at 127 pips. So this was Friday, Monday, Tuesday, straight drop, bang, like that. Okay, so that was that. But I consider it a sweep because you just as easily could have gotten in on Monday, held overnight to Tuesday, and you would have got a handsome payday with that before price did retrace. But this is the only trade that I'll be looking at, just this short. Okay, the short pay trade right there. Okay, so that's that. Let's see. The next one, these are all sweeps, by the way, too. This was CAD Yen short, pretty much did the same thing on Monday. He had a 17 pip body right here on Friday. Monday gave the sweep where it went above the high, closed inside, and then Tuesday gave the drop. But again, you want to be sure to take your profit on the other side of the range because if you didn't, anybody who held on to a short got murdered because price came right back up. So yeah, use the other side of the range as to take profit and get out. So that was that. Pound yen on Monday did the same thing. 21 pip body on Friday. Monday gave a tight range of, Friday had a 21 pip range. Monday was also a tight day. And then Tuesday, straight drop, 220 pips. Amazing. Okay. And then price retraced a little bit. So that was that. So, but again, it swept the high. Anybody who went short here got paid handsomely. Okay. So Tuesday. So that was Monday. Tuesday, we had a euro dollar short. So Monday gave a 5 pip range. That was this candle right here. Tuesday swept the high, closed inside of it. Wednesday did retrace just a little bit, but then eventually did fall for a 75 pip drop. Get a quick drink of water. All right, so that was euro dollar. I like sweeps because small candles lead to bigger ones. So that's why I like them. That's probably my favorite setup. This one Monday on pound dollar, 9 pip body. Love to see it. This little green candle right here. Tuesday swept above the high, started to close down. It fell the rest of the week more or less, 100 pips. Now, I don't recommend holding that long, but Tuesday did give a 100 pip drop, and it's more than enough for me. Done deal. So that was Tuesday. There was a trade every day this week. Friday, Euro New Zealand short, 11 pip body. I like seeing small candle bodies on pairs that have large ADRs because it's just a matter of time before small candles turn into really, really large ones. But for now, the price went above, swept the high, closed back inside of it, just like our pattern shows here. Small body, swept the high, closed inside of it. I mean, that's it. You can't. It's hard to mess this up. So that was a 50 pip drop. The only thing with this one is that it didn't go to the other side of the range. It stalled out at the weekly open price. So take what you can get. Let's see. A Friday as well. Pound Aussie long, same deal. This was a long though, so you had a 17 pip body for the candle. Price opened, went down, swept the low. So your entry would have been down here somewhere, and then you just go up as much as you can. 50 pips would have been a good payout for that, but the entry was at the bottom of this range, ideally near the prior day low. So that was that. So let's see the momentum trades. Now, what are momentum trades? Momentum trades are whereby we use the ATR indicator to determine whether or not we can get a retrace. So there's a description. There's links in the description or on this channel. This is deep study on the momentum trade to see that. But this is all we're looking for, an ATR candle that goes below the prior week low. And then our ideal range is we still want to enter around the prior day low after the ATR gets exceeded. And we want to see it to retrace at least up to the middle of the ATR candles range. So, but again, there's another video on my channel about that if you're not sure what I'm talking about. So let's see what happened though. On GJ, we had an ATR candle right here. Okay, below the prior week low. So this was on Tuesday. Thursday was the trading day right here where price started to come up past the range's bottom, and it did hit the middle. This was good for 112 pips long, okay, to go to the middle of this range, right there. So that was that. That was on, what was that, Thursday. Wednesday, pound long gave another example as well. So you have a ATR candle below the prior week low. Price dipped below it, closed inside. Pardon me, and it was good for 40 pips. So it did eventually. It took a couple days to get to the middle of the range, but this trading day right here, I'm not big on holding overnight, but this trade did pay out to the middle of the range. So that was good. And then lastly, we have our 3x3 continuation trade. So we have Monday and Wednesday for Swiss yen short. 3x3s, it's a link in the description for that. But the short, here we go. We have 3 candles, 1, 2, 3. And candle range theory playing out here, and then we took a reversal. So ideally, 3 candles up, 2 candles down is all we're looking for on the daily chart. So let's see what Swiss yen did. So you had 1, 2, 3 candles up right here. It poked above the high. Tuesday was the continuation day. Had a 150 pip drop right here. That was Tuesday, and also kept dropping before it did retrace. So you take what you can get. But Tuesday was the trading day. And if you could have got in above the daily open, catching the wick of Tuesday's candle, that would have been ideal. And just catch the continuation to the downside. Would have been good for 150 pips. Okay, so that was that. So again, 3 candles up, 1, 2, 3, 2 candles down, 1, 2. That's it. After that, trade's over. I'm not trading this, and I'm not trading that. Let's see, and then Aussie dollar short. So what do we got? 1, 2, 3 candles up. This candle here swept above the high, closed inside, and went to the downside. So Tuesday was the range day, and Wednesday was the first trading day off the high of the day. Thursday gave the continuation trade. You could have got in around the 50% level because Thursday did open. It went up and then came down Thursday through Friday. Okay, it did come down. But this was good for about 50 pips if you caught a good entry around the range top. So that was our, like I said, 3x3 continuation trade. Either here. Yeah, by then, really, Thursday was the only trading day. Friday, this BC price didn't really move that much. So getting in Thursday and then taking this down would have been more than enough to satisfy the trade, the burden of the trade. So that was it. That was the week in review for a week after last, a week before last rather. So, but again, you had Monday you gave a trade, Tuesday gave a trade, Wednesday gave a trade, Thursday gave a trade, Friday had 2 trades. Okay, so there were 3 on Monday, 2 on Tuesday. You see that. All right, so it won't be like this every week, but most days you should see one of these patterns playing out on one of the pairs. So from then, it's just a matter of how far it goes. Sometimes it'll go 100 pips. Sometimes it may only go 40 or 50. But you want to be there when it happens, and you're just looking for the same thing over and over. So I appreciate your time and attention. Thank you so much for watching, and I hope you have a great rest of your day. Take care.